Well, hello again, Solis Wealth family. Greg Solis here with our update. Everything's going real well. If I look a little tanner, it's because I am. I got away on vacation. Had a great time for Monica's birthday. We went to Punta Mita. What an amazing place. We'd never been there before, so we were excited to go. It was cool because Monica and I spent about 3 or 4 days, just the two of us. And then actually we flew the girls up, Nicole and Emily. They came up afterwards and spent 3 or 4 days with us. So we kind of had the best of both worlds, a little alone time, a little bit of family time, but just had a blast. Truly ranked as one of our favorite trips. A little expensive out there, but nevertheless, it was a good time. Some friends had recommended it to us, some very close friends of ours. They said it's one of the best places they'd been, and it was. So anyways, I hope your summer's off to a good start. Ours is. I will tell you, by traveling a little bit, the economy is back. That pent-up demand that I've been talking about, oh my gosh, the airports were packed, the airplane was packed, Punta Mita was packed, the hotels seemed to be very busy, so it is definitely opening up as we had predicted, and it seems as though the vaccine has taken hold, people are out and about, and this economy is cranking. I'm sure you're seeing some of that as well. So that's being reflected in the markets, as I've been saying all along. The GDP numbers are looking strong. Inflation is still a concern, as I've been talking about. The consumer price index just came out. It was up about 0.6% for May. That's the highest we've seen in about 13 years. The question is, again, the big question is that because we're coming off this low base number, and so we're just seeing higher prices because we were in a deflationary environment during the whole pandemic. So it looks as though we think it's going to be short-lived and we don't have systemic long-term hyperinflation. And so we think that'll probably be short-lived, and that appears to be what the market is telling us because the equity markets are continuing to hit all-time highs, which is great to see. The bond market rates have not spiked up. The 10-year treasury is still hovering right around 1.55%. And so we're not seeing a spike up in interest rates, which we typically would see in a hyperinflationary environment. So right now, everything still looks pretty solid. Everything looks pretty good. Employment numbers came out. They looked good. The jobless claims are going down. And so those are all very optimistic things for us to look at. So fundamentals seem to be in a very strong position. The headwinds, as I've talked about, is of course if inflation rears its ugly head, if we see taxes going up too much, and if the Fed begins to pull back, then we might see some headwinds. But right now, the fundamentals of the economy are winning out, and we're seeing a good equities market, and we're still optimistic about the rest of 2021 and 2022. So that's it for now. I hope you have some nice summer breaks as we did. Truly a blessing spending some time with Monica as we celebrated her birthday and spending some time with the girls as well. I hope you and your family are doing well and you have a great summer. God bless.